Okay, so today a company that's been around for 114 years, that has paid a dividend for a century, lost a quarter of its entire value in a single day. Its worst day since 1987. We're talking about IBM, and everyone's explanation is that they just fumbled it, bad quarter, bad management. But when I read what actually happened, it's not a story about one company screwing up. It's the first crack in something way bigger. And once you see it, you'll see it everywhere for the rest of this year. Here's what happened. IBM warned that its quarter came in soft, and the chief executive got on the call and literally said, "We faltered." Brutal. The stock fell about 25%, wiping out more than $50 billion in value. But the real story is the next sentence he said. The reason the big deals didn't close. He said the deals didn't close because customers diverted their budgets to artificial intelligence servers and memory. Read that again. It's not that companies stopped spending. They spent, just not on IBM. Every dollar a business has for technology is now getting yanked toward one thing, building artificial intelligence. And whatever isn't artificial intelligence, the old mainframes, the boring software contracts, get starved. IBM didn't lose to a competitor. It lost to a category. Now zoom out, because this is the part that matters. The artificial intelligence build-out this year is astronomically expensive. The four biggest spenders, Amazon, Microsoft, Alphabet, and Meta, are going to spend around $725 billion on it in 2026 alone. $725 billion. That money is not free-floating. It comes out of corporate budgets, the exact same budgets that used to buy servers and software from everybody else. So the build-out doesn't just create winners, it has to be fed. And it's eating the rest of the technology industry to do it. So look at these two numbers together because they are the whole thesis. On one side, $725 billion flooding into artificial intelligence this year. On the other, more than $50 billion of IBM's value erased in a single afternoon because its customers picked that first number instead of it. This is what a vortex looks like. It doesn't just pull things up. It pulls things down, hard at the edges. And IBM is the biggest, most recognizable thing that just got pulled under. Here's the wild part. Remember Michael Burry, the guy who called the 2008 housing crash? He just bet against this whole thing from the other side. He's shorting the chip makers, Nvidia, Micron, the whole semiconductor complex, and he said, quote, "The end is nigh." Now, his 30% crash call is his opinion, and he's been early before, so take it as a warning, not a prophecy. But look at what he's actually pointing at. The same force. One trade so big it's distorting everything around it. He's shorting the top of the vortex. IBM just got hit by the bottom of it. This is the thing almost nobody is saying out loud. In a normal boom, a rising tide lifts most boats. This is not that. This is one trade so powerful that the winners soar and the bystanders bleed on the very same afternoon. The money isn't being created out of thin air. It's being reallocated, violently, from everything that isn't artificial intelligence into the handful of things that are. And the market keeps staring at the inflation report, while this reallocation rips through the tape underneath it. Okay, the honest part, because I'm not here to scare you. This does not mean the market crashes tomorrow, and it does not mean artificial intelligence is fake. The demand is real, the build-out is real, and the winners might keep winning for a while. This isn't a short-everything call. It's a lens. It just means that if you're holding some steady, old-economy technology name and telling yourself it's safe because it's cheap and boring, you might be standing next to the drain. Cheap and boring is exactly what the vortex eats first, because that's whose budget gets redirected. Put it all together. The whole market spent a month terrified of today's inflation number, and it came in fine. Cool, even, but inflation was never the thing moving this tape. The thing moving it is a single trade big enough to make one company soar and cannibalize another on the same day. That's the vortex. And the tell isn't in the inflation report or the Federal Reserve minutes. It's in the earnings calls of every company that isn't artificial intelligence, quietly explaining that its customers spent the money somewhere else. IBM just went first. Here's the read I'd leave you with. When one trade gets big enough to bend the entire market around it, stop watching the winners. Start watching what's getting pulled apart at the edges, because that's where the story actually tells you what's happening. For artificial intelligence right now, the edge just showed up as a 25% crash in a 114-year-old blue chip. Don't watch the headline this quarter. Watch who gets pulled under next. That's the asymmetry. I'm Frankie, one Contra Ryan read a day. Subscribe.